Hey everyone, Couch Investor back with another Lemonade video for you today. So in today's video, we're going to go over Lemonade's Q4 earnings report. At the time of making this video, they still did not have their earnings call, so keep that in mind. If there is anything crucial that I hear during that call, I will put it down in the description and in the pinned post below. So in this video, we're going to look at the key growth numbers that Lemonade has reported. We're going to look at their guidance as well and try and understand how this year will pan out. But before I do so, I just want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. And now let's get on with the video. Alright, so first a quick look at the charts. As we can see, since my last video, the stock has gone down, touched on that little 120 support line, went back up before earnings, but I don't know why it's said here pre-market 132. Well, in fact, it's down 6% or so, as we can see here. But if during the earnings call, maybe they reveal something that they have not been revealing during the earnings report, you might see the stock actually rebound and not go as low as $120. But like I said, this video has been filmed before the earnings call. So if something extraordinary has been said during the call, you might see the stock actually bounce up. Right, so now that we've got that out of the way, let's look at the earnings report. And as we can see, same thing as with the Square earnings report. I like the way they visualize and put out the numbers, unlike many others. So first up, we have here, in-force premiums are up 87% year over year. That's a 5% beat. Premium per customer up 20% year over year to $213. Customer count, we knew that at the end of December, they reported 1 million customers. So apparently it was 1,802,000, up 86% year over year. But quarter over quarter, that's only 6%. So maybe they'll address that during the call, why growth has slowed down this quarter. Obviously, let's not forget that we're in a pandemic, so maybe that's one of the reasons. Gross earned premium up 92% year over year to $50 million and a 6% beat. Annual loss ratio is down to 71%, a 10% decrease, which is very, very good, especially since they added and opened up in new markets. And that's especially important because as we can see here, the product mix, we continue to focus on diversifying our product mix, with non-renters accounting for approximately 1/3 or 32% of total in-force premium in Q4, compared to approximately 25% at the end of 2019. Homeowners and pet insurance represented more than 40% of their new business in Q4, up 1/3 in Q4 2019, which is great to see because, as you know, renters insurance is the pretty cheap insurance that everybody knows. Homeowners is the one that you want to grow more and more because of the higher premiums. This is something that I've talked about with Dave Lee, and it's good to see that they're finally growing that homeowners insurance base. And here for Lemonade, we can see that each dollar we invested in advertising in 2020 delivered 88% more in-force premium growth than in 2019. This is great because this allows them to maybe spend more on marketing to acquire specific customers that will be maybe more expensive to acquire, but at least they know that those will deliver a higher in-force premium. Regarding their newly launched term life product, it wasn't live in Q4, like I said in my previous video, and so it isn't reflected in today's result, but they say that early indications are encouraging. All told, they're increasingly confident in their ability to launch additional new products that quickly contribute to new customer acquisition and to their overall economics. We can especially see that with pet insurance. I think pet insurance was a genius move by Lemonade. It allows them to tap into markets and into customers that probably other companies did not have access to or did not know how to acquire them. Most of you know graduation is a big part of how Lemonade operates. So in Q4 2020, they saw a robust growth in graduation. That is that renters becoming homeowners and increasing their premiums 6 times of about 250% year on year, which obviously significantly outpaced the growth of overall book of business. Now, another very important point, especially with how Lemonade operates, is that sequential growth rate of customers with multiple policies outpaced growth of single policy customers by 5x. This suggests that one of the company's core strategies is playing out. By delivering a best-in-class experience to customers at every stage, they're able to drive coverage expansion over time. And this again goes back to their pet product, which I said is a genius move. So roughly 50% of in-force premium attributable to our pet product at year end was generated by cross-sales to existing customers. A cross-sale to pet insurance generates 4 times medium increase in a customer's premium, driving very compelling LTV and CAC ratios. And last thing before we go look into the guidance, so the loss ratio, which is pretty important in the insurance business. So their loss ratio was 71% as compared to 79% in 2019. Their fourth quarter loss ratio was 73%, little change from the 72 in Q3 and 73 in Q4 2019. Now, just by looking at those numbers, you might see, oh, didn't change much, the loss ratio didn't change that much. And that's right. But if you think a little bit further, you know that they've expanded in new markets and you know that they've added new policies. Why does that matter? Well, because the loss ratio of customers in the first year of their policy is typically higher than that of substantial years, a phenomenon known as the new business penalty. They continue to explain that right here. If you want, again, link will be down in the description below if you want to read the whole report. But overall, new business penalties dissipate when the business is not new, and their systems have a track record of turning data handicaps into data advantages fairly fast. Oh, and before I forget, the revenue. A lot of people are asking why is the revenue lower? Well, because of this. The proportional reinsurance agreement went into effect at the beginning of the third quarter, increasing the proportion of premium that is ceded to 75%. This meaningfully improves the capital efficiency of the business, but can make year-on-year comparisons of revenue misleading. Now, because of this new agreement, for accounting rules, they cannot report the ceded premiums as revenue. So that's why you saw and you will see a decrease in revenue for the next coming quarters as well, year over year, that is. All right, so guidance for Q1 2021 will take a little hit because of what happened in Texas and what is still happening there. So in-force premium in Q1 will be between 241 and 246, still an increase of what we have today. Gross earned premiums will be between 53 and $54.5 million. Revenue up just slightly between $21.5 and $22.5 million. Guidance for the full year 2021 is a bit more important because they said that the Texas situation does not really affect the full year guidance. And we can see that here that in-force premium for full year will be between $372 and $378 million. So quite a nice increase, actually 76% year over year. Gross earned premium of 270 to 275 million, an increase of 71% year over year. All right, so to conclude, I'm pretty happy with this earnings report for the main reason that whatever they're doing right now is working. Lemonade keeps on growing. They can keep on adding new policies, open up in new markets, and we can see that it's actually working. More people are graduating, more people are buying new policies. They can acquire new customers through those new policies, as we can see with the pet insurance. Now, I do have a couple of questions. One, why is the customer base growth slowing down? And two, why can't we hear more about what's happening in Europe? Again, this video is filmed before the earnings call, so maybe they have addressed that already during the earnings call. And that will be it for this video. Overall, pretty happy with this earnings report. Again, it's not the company's fault that the market is giving this company a high valuation, but as investors, we would like that valuation to be justified, and that's completely normal. Let me know down in the comments below what you thought about this earnings report. Will you be buying? Will you be selling? Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.